This has been a great summit so far, honestly, and there have been a lot of difficult acts to follow, but I think with this group, it's not going to be a problem, and we're definitely going to have a conversation. I don't have to introduce them. I think they've already been introduced, and they don't really need an introduction, so we'll just go ahead and jump right in. So before we go into the next stage of embedded finance, I kind of want to take a little bit of a look back. And I'd like to ask you, what inspired you and your institutions to move into this embedded space? I mean, was it customer demand? Was it a strategic decision to move into an innovative space? And Gilles, I'd like to start with you because I know you've been in the space for over a decade, so if you wouldn't mind just kicking off that conversation.
We've been in the space a little bit longer than that. Is that going to change the answer?
How long have you been in this space?
16 years.
Wow.
For us, it's just a mean to an end. The goal itself is doing well by doing good. And this fits right in the sense that embedded finance and financial technology in general has enabled us to access a lot more people, help with financial inclusion, help with accessibility to credit, revolutionize accessibility to credit, and step in where most of the large banks actually stepped out or just shunned broad swath of the marketplace. And this was really the big motivation behind it. We just came at the right place at the right time. Just opened our doors in 2008 after the financial debacle, and then lo and behold, the HELOC program disappeared, and then in comes the fintechs and said, we'd love to partner with some banks out there, and that was just a golden opportunity for us to come in and help, and then the rest is history.
No, that's a great story. And Chris, I know you recently had a byline, I believe, in BankNet that talks about the evolution of Thread Bank. Would you mind speaking about that?
Sure, no, happy to. When we did this, we recapitalized a small bank in Eastern Tennessee about 3.5 years ago, and with the intention of doing just what that article said. So thankfully, 3.5 years later, I think the team has executed incredibly well. We've got a board. Joe Maxwell is here. I don't know where he is. He's our chairman, so I have to shout out to Joe for just being my partner in this and helping us to assemble the team, the investors, the capital, the board who believes in this, because our belief from the very beginning was that community banking really matters. It matters to the country. Communities matter greatly to the country, and if we don't figure out how to operate in the new world with new competitive forces in ways that community banks can hopefully emulate down the road with folks like this and in this room figuring this out, there's a big problem. And we also saw the opportunity from an investment point of view and the ability to make a difference in doing that. So we partnered with a small, tiny bank in Eastern Tennessee with 2 branches, 90 million in assets, and thankfully we're working on kind of full integration that the future state here will have those branches operating on the same exact technology that the digital banking, the embedded banking platforms operate on. So it's been, I think this is showing the way forward for maybe not every bank, but some banks to take this piece of what we're doing or maybe other pieces and how to pull it all together.
Thank you. Eric, Sean, do you have any other additional comments regarding your inspiration?
First, I have no idea what I'm doing on this panel with these guys. There must have been some error. In terms of, so my current situation, I've been at Lincoln Savings Bank for almost a year now. And our Banking as a Service division, LSBX, dates back about a decade ago. And the genesis there was really serendipity, right? There was a cold call that came into the bank about an opportunity to partner, help that partner enable banking products and services to their end users. And then the rest is history for us. It's been a challenge. And I wouldn't say, coming in, we lacked, some focus, we've lacked some direction, and so we've really focused on where are the spaces that we want to play in, how do we support those spaces, what are the business cases, and the like. My prior institution, we stood up banking as a service really because of the banks that are on this panel. We recognized it was a strategic opportunity. We recognized that I think, has been said, is that it's really core to a community bank to serve customers, but do it in a geographically boundless way. Where we sit in Iowa is not a growing community, so we have to look for ways to drive revenue and growth that comes from outside of our geography, but is still core to who we are. And the same held true for my last institution as well, being in upstate New York, rural communities, and again, how are we going to drive growth? There's a great quote, pioneers get arrows. These gentlemen got arrows. They learned, and we were able to follow their lead to some degree. And so settlers get land. And so it was an opportunity for us to, again, take the hard lessons learned and then apply those lessons, but by no means is it easy by any stretch, as you can all attest. But for us, first time was conscientious, second time I inherited the business, but I really like the business and I see the opportunities for us ahead, despite some of the headwinds that we face. So hopefully headwinds will become tailwinds because of recent events.
I'm sure there's a lot of people in the room that feel the same way. Eric, did you have anything to add?
I'll give a little perspective on why Sean and I and Chris are here. So this is a home court advantage right now. This is like the best audience I've presented at in 5-10 years. Usually it's skeptical community bankers saying, why are you letting these fintechs in? So we need to thank AFC, and a couple years ago, the board of a Banking as a Service association, which we founded along with 5 or 6 other BAS CEOs, we just couldn't get the traction because we needed the counterparts. We needed the partners, the fintechs, and the brands that want to get into embedded service. And so we collectively got together. My buddy Wayne at ICBA introduced us to Phil. And then we all made the homage to the Godfather up in New Jersey. We apologized first for trying to do it without him. And then we said, why don't we bring these organizations together? So as Phil says, there's 30 banks now. More importantly...
The Godfather never ends well, by the way.
No, it doesn't.
Yeah, you watched the movie, right?
Yeah, well, I know it. That's why I'm at the end, closer to the exit to run away.
Yeah, it's not arrows, it's bazookas.
Yeah, they've been out. So anyways, just how we got here is pretty cool, and this home field advantage we have here right now, and the administrative changes, and I think Gilles started it. It's important we just remember how we got here is why we're still here, is we think we can make a difference. You think you can. We think we can help you make that difference. And that's a lot of passion by a lot of people that are going to change how we do financial services in this country. So thank you all very much. I mean that sincerely, and we're just humbled to be a small part of it.
So following up on that, looking back, when you consider the decisions you made and some of the strategies that you chose, would you do anything different today?
Oh, I would have never done it. Take everything I just said and throw it out the door. I really don't care about the consumer. It's not worth the headache. No, gosh, I apologize. I don't mean to jump into. I'd say, yeah, we learned a lot. We're continuing to learn. Yeah. But I tell you, the one thing from our humble perspective is when we were getting in it in 2015, 16, and 17, and we were working with our prudential regulator, and they were great, and they said, hey, we found out some Nigerian drug lords got some money from you. What's your look-back strategy? And we're like, oh, that's good. You caught that. We should have caught that. I'm being facetious, right? Please don't react, and that doesn't go in print. But it was, you were allowed to make mistakes. You were allowed to learn and grow, and you were allowed to innovate. And I think you can hear some of that passion coming back. So today, what we would have changed is to undo what's happened in the last 6 years. My worst fears are we're going to kill innovation. I really applaud the San Francisco Fed. I'm not just saying that because I'm up on stage. They've been tough from day one, but they've been consistent. And I'll deal with that all day. And we made a lot of mistakes. We had to exit some partners. We had to reformat how we onboard new partners. We had to relearn how to financially make the model work because we didn't know how to price stuff. All of that's normal, right? I mean, what's abnormal is today you're not allowed to make those mistakes. And that's what I hope as a collective group we kind of push on to say, we are trying to help consumers, we are trying to help small businesses, we are trying to make this country great. We just need some flexibility in that mission.
I'm opening it up to the panel. Any additions to those comments?
Well, I think that's, what he said.
Pretty well covered.
But I think more importantly, I'm not sure that me personally, I would necessarily change anything that we've done, because those lessons are important. If you skip those lessons, you don't learn anything, and therefore, can you truly innovate if it's all, you just get the blueprint, execute, and everything is fine? So I don't think that that's the answer. I think that we're going through an evolution of the industry as it stands today, and I view that as healthy. It's not dissimilar to any other cycle that we've seen. For me, I would liken it to the dot-com period, where we saw bust, right? And then from that, obviously rose a very mature industry, the internet as we know it today, which is allowing us to continually innovate. I do think that from the standpoint of being allowed to innovate, I think it's perfection is the enemy of good, right? And innovation is messy. You are going to make mistakes. You are going to break things. It is very hard to be able to do those things and then know on the other side of that, you're trying to do good, but you're going to be punished for trying to do good. And then, not to be hyperbolic, if we continue to operate in this fashion from a regulatory perspective, it does impair the financial system, the US financial system. So inability to innovate is going to stymie our system, the way that we bank, we are the trusted financial system of the world. So I'm hopeful, if nothing else comes out of this election cycle, is that we get back to sensible regulation that's clear, that's concise. We can have a conversation with our regulators, talk to them in a non-adversarial way, which I think should be the conversations that occur. This is what we're going to do. This is how we're going to do it. They give us feedback rather than, I'll give you non-objection, and then if you do something wrong, I'm going to slap you. I think that's where we need to get to, right? And we grossly need to simplify the Federal Register. So I'm hopeful that all of that will re-engage this industry for all of us, banking in general, but specifically banking as a service, partner banking, embedded finance, whatever we want to call it. How do we continue to grow? Because I do agree with Chris. I think the steps that he's taking, the blurring of the lines, I think that demarcation is going to go away. And I think that you really want to have a franchise that can operate in both spaces if you so desire and choose, and have a singular tech stack and all that good stuff. So.
Well, thank you, Sean, for answering my next two questions. So
we can go now.
We'll probably open it
It's
up for
about
questions and
efficiency.
answers at the end.
Yes.
No, I did want to ask, though, a number of these panels in the title actually uses two words together, innovation and regulation. And I did want to ask the panel, do you feel that the regulators are actually adapting quickly enough for fintech-friendly banks such as yours? So I'll open this one up now to, I guess, everybody, of course, but Gilles and Chris.
You could start.
Boy, is that a loaded question. I think, and maybe it even goes a little bit back to what Sean and Eric were talking about, that if there's nothing that we take away from this, it's that learning is a constant thing in life, right? And most of the time, the best learning comes from failure, from mistakes. We know all these things to be true. There's nothing new under the sun. All of these things that maybe we were taught growing up and you have to learn and relearn, things as good as they may even feel today, it's never that high, and it wasn't as low as it was several weeks ago, is I think the message. And we have to, people who innovate and who have the personality to be doing these things are oftentimes very different from people who maybe are drawn to regulatory. I think we just have to accept that, right? We have to try to put ourselves into one another's shoes. I think that's really the spirit of what we're talking about a lot in all of these conversations. How do we put ourselves in one another's shoes, have some grace? And I think working with policymakers, working with the regulators to try to re-incentivize and get things aligned more is the way to do it, and have grace try not to take things personally, and recognize that we are skating to a much bigger objective than what somebody might write about us or not. That's never been really important to what we're doing. So I think if you focus on doing the right thing all the time, operating with integrity and transparency, you can kind of endure whatever the cycle is in that frame of mind, and share with your regulators that, and then also that earns you the right to stand up for yourself. And so we have done that. I'll do that until my dying day, and would hope that's what the approach everyone would take. And people are drawn to that, and they tend to respond pretty well to it, so long as you do it with fairness. So I don't know how all that fits together, except this is the way you operate, and that endures through cycles no matter what you're doing.
I appreciate that. Gilles, do you want to add to those comments?
I think there's a need to change the perception or the definition of certain terms. So clarification at the exam level, that means clarification at the policy level and at the research level. Things like growth, broker deposits, 4 versus 9, social security number. All these are definitions that are antiquated, were made like in the 70s and in the 80s. There's an absolute need for a new lexicon. And we may have a grassroots effort from some examination teams that actually are looking to understand better and to renew their lexicons, but they can only go so far. It has to come also from DC and from some of the regional offices if they have some sort of leeway to operate on their own. So that is critical. So that means we need to gather the stakeholders, redefine what the industry looks like today based on a new thing called technology. But guess what? Technology has been here for already like 3 decades. Like we started doing transaction online and with the advent of the internet and using of the credit card and the ATM. All these are some form of technology. So today, the pace of technology is accelerating. And I think that once we have the lexicon down pat, then we can actually keep updating that lexicon so that the examiners in the field are going to be a little bit more comfortable with the way that we're doing our business. And it's very important because at the end of the day, collectively, when all the consent orders were issued, I would be very curious to hear how many consumers were actually hurt. And I think the number is quasi-nil. And we have to not forget why we're here. Like Chris said, this is the greater good. The consumers need us. And now they tasted the waters, they tasted that product and service, they're not going away. And they're asking for more. But obviously our responsibility as the last line of defense, we got to protect them. In order to do that, we need, like I said, a new lexicon, a new regulation guidebook that utilizes technology themselves. We need the regulators to start embracing technology as a tool themselves so that their exam will go quicker, we'll get better feedback, and they'll understand where we're coming from by ourselves using the very tools that we're serving the consumers with.
Yeah, I appreciate that, and this is a very important topic, so I also want to make sure that Sean and Eric, you have a chance to, I know you touched on it already a little bit, but if you have anything you would like to add, please do.
I will just reinforce that the consumers are winning, small businesses are winning, competition is healthy, it's what America stands for, and you are driving change in this country. We want to participate in that and help drive it, and that message has been lost to a certain degree. I think the FDIC announced, and I want to go on a step further and say maybe the FDIC took credit for the unbanked being at the lowest amount in history, at 4% of Americans. I'd like to think you guys had a lot to do with that. I missed that in the fine print of the FDIC disclosure. I'd like to think you did away with the majority of OD and SF fees in this country. I'd like to think that you have lowered the cost to borrow in this country. What I also realize is that humbly this group, working with Phil and all of you, have got to tell that story better. That's on us. We have a great story. we lost the messaging. And I know Phil and the board and this group is committed to doing what's right, and as this progresses, to tell that story better over the next couple of years. We have to. Our customers are dependent upon that story being told well. We can't go back 20 years. That's unacceptable.
What he said.
Well, you wrote my notes for me.
We shared notes. Yeah, I think the question that you asked was, in terms of the regulators, are they keeping pace? I think the answer is no. Can they and should they? Absolutely. But I think it does go to the point about having a vernacular, a lexicon that we can all operate from, understanding the tools that we use, why do we use those tools, how do we get to 4%? It's actually 4.2%. 4.2% of unbanked or underbanked is the remainder, right? So we've made incredible progress because of technology and because of banks that are willing to step into the space, as well as all of our collective efforts as bankers to drive this forward. I think Gilles, your key point really is we're trying to innovate on the back of rules and regulations that were written in the 1970s that did not contemplate where we would be today. Now fast forward that to AI and how that plays out. We don't really have a national directive, as we heard earlier, for AI and what it's going to do, where do we want to use it, et cetera. How do we want to control it? How do we want to be ethical through its use? Cryptocurrency is, amazingly, I'm not a crypto bro, but it's back. It's something that we need to contemplate, right? So all of these things were not contemplated during the 1970s, 80s, and so on and so forth. So I think the regulatory agencies, prudential regulators, really need to look at their rulemaking against the backdrop of today, but then also make sure that it's agile enough as we continue to grow, as we continue to innovate, because this will be the slowest innovation will be from here on out, and it's still pretty darn fast.
Okay, so you just jumped to my last question. So I am going to go ahead and move forward, though, because I would be remiss if I didn't ask about the change in the administration, of course. This policy summit has a certain timing to it. So I would love to hear your thoughts on how this change in the administration, including most likely changes to the regulatory agency heads, how that might impact your financial institutions or even your partner fintechs going forward.
I'll take the first stab. I'm a realist and a practical manager that the names at the top may change, but staff has been through 4 to 6 administrations. They're masters of working through the system. I don't anticipate a lot of regulatory change for the foreseeable future. Now, I also heard a panelist speak earlier say some of the proposed rules are dead upon arrival, and that's great. But I'm telling you, my relationship manager at the Fed, they're going to be there on Tuesday. And our conversation from last week didn't change. I actually like the Fed, and I'm glad. I think we're aligned on many, many, many things. Transparency, better rulemaking, understanding, cooperation. San Francisco Fed's been great. I don't want that to change, right? I understand some of the rules are getting a little crazy, and that may be helpful. But I'm telling every banker in here and every partner in here, and listen, the staff is still the staff, and they've got long memories. So walk carefully over the next couple years. 4 years will go like that. My 2 cents.
I'm sure there's somebody else that wants to speak to this.
So I'll take a little bit of a different approach. The difference between an optimist and a pessimist. The pessimist says it can get worse. An optimist says it can't get worse. And I think it can get worse. And honestly, I really want to believe that there's a grassroots effort from a new crop of examiners who are young and talented, and they're of a total different vision because they're users themselves. And because they need fresh blood. They do have people that they interview and hire every single day. And that new crop of examiners is actually adopting change and trying to force change from the bottom up. So true, we're going to see a change at the top. That's inevitable. We know the agenda from this administration. And then, hopefully, at some point, there's also pressure from the bottom up that will seep through the, the regional offices, and then hopefully goes all the way up to the heads of the agencies, and they'll meet somewhere to actually effectuate real change. I think that's the big difference between the previous administrations and this one, is the fact that there is this new crop of examiners who are they desire, they thrive for change. They really want themselves to understand better how to regulate us. And through that, they will actually start pushing back at some of the idiosyncrasies of that the agencies have been practicing for the past 20 or 30 years.
That's an interesting perspective.
Yeah, I
Chris?
think folks in our shoes have to really think about all these things strategically. And so therefore, there have to be likely multiple prongs to what you do. I think the first thing, which is always, I try to think about things, what endures, what's scalable, what can you do on a repetitive basis and be predictable and have predictability. And the first is always focusing on what you can control, right? So absolutely focus on that, which I kind of touched on some of those things earlier. But part of that is being intentional about how you do things, how you interact. That, like Eric said, the examiners on Tuesday are the same ones that were on Monday, and that's absolutely true. However, they're people too, and they're going to absolutely respond to the environment around them and the environment that's permeating through the agency. So while we're doing everything that we can control in that direct environment, what else can we do to the point of, right, that's why we're all together. We're not here, we're pretty busy people. I don't think that, company paid trip to DC is not how I typically want to spend a Monday and Tuesday. So we're here to try to get something done. And if we don't actually remember that it's we the people in this country, we're all citizens too, and we all have representatives. We have access to different folks, and coherently tell our story, tell the message, get out there and be proactive and be very active in that, and help change policies, help change messaging, help change understanding, and because that will absolutely permeate its way through. Because I think most of everything that we talk about and say is pretty darn common sense. It's just not well understood, or it's not understood by the right people who can push that down. And if we just say, well, that's too hard, it's too bureaucratic, nothing ever changes, well, guess what? Nothing's ever going to change. So if you don't believe in that, I think you probably should move on and do something else, because this is too hard otherwise.
Yeah, Sean, I see you shaking your head yes. Would you like to add anything?
I would just say, I think you touched on it when we started, is that why are we all here? And Chris, to your point, it's really the advocacy. It's to advocate and educate, right, and do an effective job communicating. But I think also doing an effective job communicating to our customers the benefits of what we do, right? How does it help them? How does it help them with their financial wellness, their financial journey, where they're going, right? They want to bank in a certain way, and that's why we're seeing the proliferation of fintech in the marketplace, primarily with the consumer, because there are a lot of things that we didn't deliver or we couldn't innovate to that has been innovated, but you have the safety and soundness of a bank operating behind that brand name, right? And so I think it's important for us to do a better job doing that advocacy, that education with the customers, as well as with our regulatory agencies, doing teach-ins. It's something we do with our regulator, both our state regulator and our federal regulator. We have active conversations. We don't have an adversarial relationship with either one of our prudential regulators. We view them as a key stakeholder, just like anybody else, just like our shareholder, customers, communities, and we treat them as such. It's just, unfortunately, right now, there's a long distance between Washington, D.C. and Waterloo, Iowa, right? And so I agree with Gilles' comment about, we do have a young examination team, right? And so I think if the pressure is off of them to be pragmatic, which they generally are, you can have conversations with them. how do we drive that further, right? And then how does that then start to go into the velocity of rulemaking in a very thoughtful way? Nobody is up here advocating or is taking the position of regulation is bad. We all agree that we need to operate within a certain framework, but that framework has to be sensible. And I think most importantly, consistent, right? So that we know what we're operating to, so that we can price accordingly, we can pick and choose strategically where we want to go and how we want to do it. And so to me, that's the biggest, I do think that we will see change there. So I'm probably sitting between the two of you, to be quite honest. I try to be a pragmatist. I like to be optimistic, but at the same time, I don't want to be hope, because hope isn't tangible, and it's not a strategy. So to Chris's point, play to what we know. But I do think we'll start to see that shift, and that shift will pick up over time because of how the agencies are staffing themselves. But I think also that cascades into Congress, right? Looking at the average, if you look at the House of Representatives, right, that is becoming younger, that is shifting, right? So I'm hopeful that over time there will be that genesis that we need to see, and then we can thrive. But right now it's, like I said, headwinds for the time being.
So the title of this panel is The Next Stage of Embedded Finance, and so I would like to get your opinion there. What do you see the next 5 to 10 years looking like? We've had discussions on AI and blockchain. There's just so much change that's going to happen going forward. So would love to hear from each of you on this topic, frankly. Want to start at the end?
Start with you.
That's you, buddy.
Dang it. I think of our company more as a data management company than a bank. So just setting the construct for, Gilles said the word, it's an end to a mean. And I think our company looks at that 5 and 10-year vision of, we have a huge responsibility for the millions and millions of households that each of our banks work with, to provide services to our partners so that they can affect the user experience. I think how and when we use data as the infrastructure behind a lot of our partners matters. I think the evolution of payments, the Department of Justice sued Visa. If you read some of the case, it talked about one of their qualms was inhibiting account-to-account payments, inhibiting fintech access to the payment rails. I think there's just going to be that slow drumbeat of constant access, constant improvement. Nothing really revolutionary, because I'm not smart enough to understand AI yet, and somebody will explain it, probably one of my kids soon enough. But I just see the drumbeat of progress. It's not going to stop. So I'm more of a steady Eddie, and it's going to be nice. In 5 years, it will be better than today.
Oh, God. So, what you said? No. That's my cop-out. So, yeah, I agree. From the standpoint of AI will drive, it's just inevitable. It will drive us forward from an innovation perspective. But I think to what degree and how we use it. Do we use it in a customer-facing way? Is it really managing and analyzing data to identify opportunities? Where I see us as an industry getting to is one, I think like Chris said, is that it's all seamless, right? From the standpoint of we're creating seamless experiences, whether it's for customers in our footprint or customers that sit outside of our footprint via partnerships. And then where do we sit? And I see us sitting in that quarterback role, understanding the relationships, seeing that data, analyzing that data, and then figuring out how to better deploy solutions in a more timely manner, right? What products and services, so you can start to match need to products and services. I'm still, I still don't know how crypto is going to come into play, how that's going to be regulated. Is that something that we really need to be concerned with as a financial institution? I think so. But is it being used as store of value? Is it being used for payments? Is it being used for managing contracts? That's all, I think right now, early innings and something that we just need to be aware of, and how do we play in that space. Past experience, as the bank I was with, we entered into a partnership that allowed us to offer Bitcoin to our customers. That did not end well for us. Not that anything went wrong with the customer, but from a regulatory perspective, we were told, basically, we're not telling you you can't do this, but we can't promise we're not going to bring regulatory action. We took that as game over and moved on, and so it'll be interesting to see how that plays out. And then I'm sure that there's something out there that I'm not even contemplating, right? So I wouldn't even want to wager a guess in terms of what the world looks like after 5 years. I want to focus on getting through 2024 and into 2025 and so on and so forth.
My turn?
Absolutely.
So I believe that embedded finance is here. We all practice embedded finance day in, day out. Our customers have been extremely innovative in bringing embedded finance to the small business as well as the large business. What I view technology is just a bunch of tools in order to enable better accessibility to credit, better understanding of the consumers, better predictability of the consumers' behaviors. Upstart did something phenomenal, which is using machine learning when they to predict their algorithm a little better on the credit side. They got a no action letter from the CFPB. That was revolutionary on all fronts. And in spite of the fact that we perceive the CFPB as being a big boogie monster that is coming after financial institutions, here you had an example of a symbiosis between the fintech innovator, the regulatory agency, to work in tandem on something that was positive for the overall industry. I think we need to go back to this. In other words, AI, crypto, data, machine learning, all these are tools that could enhance the consumer's experience, that could also expand the reach of us to the consumers through our fintech partners or directly. At the end of the day, if we can actually better predict the behavior of a consumer or whether he's lying or not, detecting fraud, or monitoring a transaction better, that means more transactions for that consumer. That means better credit for that consumer. That means instead of extending a $1,500 loan, we could actually extend a $1,700 loan because we understand them better, and we can actually predict their trajectory of how much money they will make ultimately in 5 to 10 years. So I want to think of a world that is fairly similar to the one we have today, but better tools and the consumer experience that is far better than it currently is. And that hindrance of that is, I would say, we're partially responsible, but the regulatory environment is largely responsible for hindering the advancement of technology. The technology exists. An online bank account has been in existence for a long time. The regulators got to it only 20 years ago, and that's how certain banks like us, when we started with $7 million of capital at the time, we had access to an online bank account facility. So little by little, there is an embrace, first of the market that is pushing the agenda, and then the regulators are embracing the agenda, but it takes a very long time. Going back to the messaging, going back to putting some pressure at the grassroots level and at the DC level, and hopefully the DC level will be taken care of in the next, few months.
No, I appreciate that. Chris, we have about 5 minutes.
Oh, hopefully not that long. So I think we've learned a couple of really important things over the last period of time. One, banks are in control, and that may be, that may ruffle some feathers, but I think it ruffles many fewer feathers today than perhaps it did. And so I think it's been encouraging to see that the acceptance of that has now kind of fully come to bear. Has something to do with the arrows that a few of us, I guess, are wearing on our foreheads. But that's really critical. So now we know, but that doesn't mean that we're in control in a bad way. It means we know who has the responsibility and the integral nature of how these operations should be structured going forward. And so that gives us clarity. I think point number 2 that we've learned is the banks with our partners have to absolutely be committed to taking banking to where the customers are, consumers, small businesses, commercial, whatever it is. And so kind of unlocking these ideas, that's where the future is clearly headed. It's here, but that's where this builds to. And Sean had said at the beginning, and I was thinking, oh man, he took my concept, but it holds that this is very analogous to the dot-com bubble burst back at the turn of the century, where there was a lot of destruction, there was a lot of chaos, a lot of people lost a lot of money, but incredible lessons were learned that created the durable foundation for the people who are committed, the ones who survived, the ones who persevered. Sometimes, right, it's just about showing up and persevering. And then those people who did that were the standard bearers, the standard setters and the standard bearers and the leaders throughout the last couple of decades, where we've all been the beneficiaries of this technology. We can name all the massive companies now that came from that. I think we're in that exact analogy, that exact analog today, and in 5 to 10 years, that will likely have borne itself out. So the message is, right, know your responsibility and live up to it. Take the beatings constructively, move forward, listen to what the customers actually want, and then be committed and be present. And that's what the future probably looks like.
No, that's wonderful. I appreciate that. I think Phil is the only person that can actually turn the clock
He gave
back.
us 6 more minutes. Yeah.
And I wish you'd do that in my personal life, Phil. That'd be great. But we do have an additional.
It's grand hot day. Go back to the first question.
right.
So one thing
we've got 6 more minutes.
I heard mentioned earlier on a panel, and since he upped us by 10 minutes, sorry to you all in advance, it was Phil. I'm enamored with open banking, and what I'm really enamored at is the big banks sued to block it. And that shocked me, because I thought, man, they're going to kill it, because they're spending the money, they have the technology. So I called my buddy at one of the big banks, and I said, why are you guys blocking this? This should be your go-to move, right, to confront the technology industry that's perceived attacking you. And his response was shocking to me. He said, listen, we don't even know our own computer systems, and we can't even get all of our affiliates to talk to each other. No way are we ready to start taking data from outside sources and integrate it. I was like, well, that's probably true. They want it, but they're not ready. I think in this room is the most prepared for open banking. In the next 5 years, I think we'll use that term more. And I think the success will lie in this room, and the big banks are going to fight it because they can't figure it out. They have legacy systems. Every reason you were created is why you're going to win even more. So it's just an interesting topic to me.
Okay, so I'm going to open it up. Last 4 minutes, last words.
Are there questions?
We can go ahead and ask questions. I know Phil's got the mic, so any questions from the audience?
Eric will answer them all.
Yep.
Chickens, come on.
It's like extra time in soccer.
Yeah, it's extended time.
Closing thoughts? I talk to these guys a lot. I have never seen them not able to sort of put a sentence together like this. Let me just say,
I'm just waiting for Eric to give a closing thought, and then we'll just say veto.
Yes.
let me, I guess, and I'll ask the question in terms of, and I know we touched on this in a number of ways. There's 4,800 community banks out there, right? And so, how should they be thinking about what to do right now? Right now, part of AFC, we have you guys, and we're very happy to have you guys. We also have a number of banks that are not doing what you're doing. They came to AFC to learn from what you're doing. What do you tell them? How do you, and again, more than just our working groups, and when we do bring everybody together, what do you tell those guys?
I think you be pragmatic, right? Think about, this is a question we get a lot. We work with our state commissioner, state banking agency. We're in Tennessee. We've got 130 banks in the state, and a commissioner who's incredible, and a governor. So we've got a great environment in Tennessee, which helps this. But they're very concerned about the banks in Tennessee, and so we think about this a lot. And I don't think going and inventing 130 threads or cross rivers or whatever is that's not a pragmatic thing. But what do they do well? and how could they utilize technology and developing risk management frameworks that we're talking ad nauseum about to capitalize on what they do well, disconnect from their paradigm of geography, and to be able to find a partner that could help them expand to outside of that footprint, outside of their assessment area, which most banks are just completely locked in on. But that's a big paradigm to break. You got to break it with the regulators. But if you're an agricultural focused bank in West Tennessee, maybe you should go take that expertise and the underwriting capability that you already have in-house and find a technology partner that could help you expand that footprint and to many more revenue sources. Like, that seems very easy. And so when I talk about setting standards and helping pave the way, that's actually what I mean, doing that so we can have that, a side benefit of us being successful for our shareholders is maybe we create that opportunity for other banks to find ways to really survive and then thrive. Otherwise, 48 is going to 1,000 or lower. 4,800 is going to 1,000 or lower.
Well, this panel certainly didn't need any introductions, but then I realized I did not introduce myself when we walked up here. So, Janet Hale, I'm Senior Managing Director with FTI Consulting. I co-lead our consumer financial services practice, and we work with banks and fintechs, assisting them with regulatory challenge, whether it's proactive or reactive, including regulatory remediation.
Let me ask you a question. What's the percentage over the last year that's been proactive versus reactive of your engagements?
Unfortunately, a lot of my work has been reactive.
60%,
Pretty much all of it.
80%?
No, I would say probably 80%.
Wow. Interesting.
So, but let's give this panel a thank you.